Okay, we are live. So, welcome to another episode of Nansen Unsupervised. This time I have got CryptoCred, which is very exciting. Going to be looking at talking about his journey into trading and perspectives on the market. I need to remember we just launched a Black Friday sale. So, if you want to sign up to Nansen, you get up to 50% off annual subs. So, we have that link below. But that is it. That's my really quick intro. So, Cred, how have you been over the last few weeks of craziness?
Thanks for having me, first and foremost.
Yes.
It's been all right. I mean, quite shocking. There's still a degree of disbelief. I still feel like I'm missing the time where I want to sit down and actually process the timeline of events, what happens, what happened, what it means for the future, so on and so forth. But, the degree of and the extent of contagion has still been so large that I still find myself like almost chasing headlines to some extent. And there hasn't been that period of like cull and fall off and everything sort of slows and we sort of, we move on from this thing. It still seems very present. And yeah, obviously, the usual stuff, shocked, disappointed, disgusted, outraged. And there's so many different degrees of outrage, from the magnitude of the fraud to how the media's treated it to seeing close friends be adversely affected. I mean, the whole thing sucks, and it's very dark for our industry, frankly, I think.
Yeah, I think actually, like, what happens is the same thing with like Do Kwon and Suzu and everyone. Like, you can't really move on from these things because actually you end up with these characters that just continue to tweet a load of shit, and then you end up with like, yeah, this mainstream media reporting in really weird ways. So you can't actually move on anyway because you don't know if Sam's still going to tweet some crazy stuff, or you don't know it's going to be leaks. So yeah, it
Yeah.
seems to go on.
So there have been some positive catalysts from this, which is,
Yeah.
for example, the move towards proof of reserves. As imperfect as that may be, people understanding the importance of custody and the point of leverage of reducing counterparty risk. And sometimes it does take like an outlier negative event like this to cause some of those changes. So that's probably a net positive over enough time, as bittersweet as it may be. But obviously, at the same time, whenever there is sort of tragedy, whenever people's emotions are high, there's opportunism. And so we've seen people kind of engagement farming for their own gain in these conditions. We've seen some actors who, bad faith actors, or, people who, not of the highest moral credibility, come back and sort of, the fact that there's now someone worse than them, they're using that as a platform to try to wash their image and say, well, this is really bad. And I used to be the main character villain, but now, that was a few months ago. So I'm going to come back now and try to claw back some relevance. So yeah, it's certainly been a mixed bag in terms of the consequences. There's good stuff that will come from this, and hopefully it will push our industry towards better standards. But the people also using this to as an opportunity to sort of come back or enrich themselves or whatever. That's sort of, it's very hard to look at that and not be pissed off.
Yeah, 100%. I think there are clear benefits from this. And like you said, like, you need these big events actually to be examples of the benefits, I think. So I was thinking just like yesterday, it's kind of amazing really that we all have custody, and like, this is the benefit of crypto, that you have custody of your own funds. So even though there is like a centralized issue, we still had that option to like own our own money, which actually, again, shows the benefits of this. And then of course, yeah, benefits of like decentralization. And I think there's been a lot like benefits also of like showing why you shouldn't trust anyone really. There should be like a trustless system. So I think eventually, hopefully, this pays off. I'm optimistic eventually, but yeah, there's probably a long way to go still.
Yeah,
but
for
yeah.
sure. We need these reminders as well to some extent, right? Because especially in the most recent cycles, newer participants, for example, Cryptopia won't be in the public consciousness, right? Or Mt. Gox won't be in the public consciousness. These events are far too detached from when they happened in order for them to sting as much as this does and would, for example. So, it's very unfortunate that it has to transpire this way, but the industry does seem to sort of circle back to these refresher type of events that reiterate these core security principles that we believe in terms of, custody and counterparty risk and other OPSEC related things. And it seems like we were due, but, the magnitude of this is certainly far more shocking than any type of ordinary clip around the ear, as they say.
Yes, it has been terrible. I'm sure we could talk about it the whole time, but I don't want to depress everyone.
That'd be a depressing one, right? Like,
yeah, they're already depressed. So I want to ask you, right? So I asked you before this actually, but like, what do you see your position is at the moment in this space? And then also, how have you ended up as CryptoCred? What is the origin story?
Yeah, sure. I mean, it's terribly unexciting, which I which is fine. As far as where I see myself right now, I mean, I always come from the position that I'm incredibly privileged to have anyone who gives remotely a shit as to what I have to say about anything, be that humor or markets or educational stuff or market structure, whatever it may be. I guess in the current arc, some sort of court jester more than anything. There are a lot of reply guy, shit posty, sort of quips and what I think are, what I try to make witty remarks to friends, colleagues, and other people in the space. So, if that provides at least some humorous value or entertainment value for someone, especially in these conditions, that's like plenty and more than enough for me. I am a trader at heart, first and foremost, even though I get memed on it chronically because I just simply haven't been terribly active this year. I see that as a blessing, not as a curse, but I do understand the memes. And, if you've got to dish it out, you should be able to take it as well. So I do appreciate what I get from that side of the aisle. In terms of getting into it, I mean, again, it's fundamentally very boring. I was a law student. So, this is in 2017. I was finishing my law degree. And so I've spent like 5 years on crypto Twitter now. And I'm only 25. And that's like a pretty large portion of my life, especially in terms of the formative years to be spending in this type of community. So any mental defects that I have and will continue to develop, I think can quite easily be traced back to when I joined the community in 2017. There's no surprise or difficulty establishing the causal chain there. But yeah, I was just doing a law degree and studying, and I have zero finance background. It wasn't anything to do with markets or psychology, or, I wasn't like a poker player or gambler or interested in game theory. There was nothing in my life that was adjacent to markets. So it was more or less sort of accident and happenstance. So I saw some tech article about crypto in early 2017 and just decided to start following stuff. I thought I was going to be a lawyer at the time at one of these commercial law firms in London or whatever. And they have this thing called commercial awareness, which is basically, do you LARP that you read the Financial Times? So, and that's sort of what that term means. But the premise was that in an interview or in something else, you should be able to talk about the world in some sort of knowledgeable way, or to have an understanding of what's going on. And so I'd subscribe to all these newsletters and magazines so I could, in an interview, hopefully come up with something semi-coherent and intelligent. And one of them just happened to be a crypto tech, whatever one. And I was like, oh, this is interesting. And, I was bored shitless of my degree at the time. And so I just kind of started following both, first just articles and then some standard Wikipedia stuff, and gradually Twitter, well, Reddit initially, which was terrible. I didn't contribute. I was just kind of, the crypto subreddits and stuff like that. And then people would just link to Twitter. And that's sort of when crypto Twitter started in the beginning of 2017. And the rest is history, as they say.
Yeah, well, actually, ridiculously, your story is very, very similar to mine. So I also studied law, also was doing endless things, thinking I need to be good at commercial awareness. And then, along the road, ended up looking at NFTs, which was my path into this. But you were much earlier than me. Yeah, gateway drug. So how did you go from I was also on Reddit first stage as well, but how did you go from interest in crypto then to actually learning technical analysis? What was your methods? Was it YouTube? Did you go for these books that people magically talk about, or is that actually just a meme?
I think the books are mostly meme, and I can comment more about books momentarily. For me, it was really the fact that when it came to fundamentals, if there just didn't seem to be consensus as to how you could value these things, and so many of them were complete memes that it wasn't entirely clear that it was worth valuing them. So I just tweeted at some people and was reading threads, lurking, whatever. And most people seem to be drawing on charts. And I thought, well, this is interesting while also being bizarre. What's the basic premise of, what could you reasonably infer from just looking at a chart when it comes to valuations or whatever else? I think I had what I thought was a TradFi understanding or model of it, even though it wasn't even that. I just didn't know what I was doing. But I just found the idea of people squiggling on price charts and that being in some form predictive, just sort of intellectually curious. And then, and that was crypto Twitter back then was terribly different compared to what it is now, right? So even TA now is 10 times, 50 times more sophisticated than it was back in the day. Sort of back in the day, you were considered a reasonably sophisticated operator in the TA space if you sort of knew your basic chart patterns. If you could draw something that roughly looks like a triangle, or this is a head and shoulders, or you knew the names for certain arbitrary superimposed constructions, people were oh shit, this guy's a real trader, Whereas now people doing all their own algos and price action and order flow, passive, active, all this type of stuff. It's completely different. But back then I was well, these people seem to be gaining some sort of information that they're charting that's giving them some sort of signal, and I can't interpret sort of what they're reasoning and thought processes. So I need to kind of reverse engineer that and think backwards. What is it that they see from the charts that could generate signal? And is there something interesting there in terms of trading, investing, whatever? And actually, I just found that the crypto space was relatively barren in terms of good educational and sort of thorough systematic materials when it came to even technical trading, let alone sort of more sophisticated models. So I looked at, okay, well, where else would I see this type of thing? And then Forex was the answer. So Tom Dante, or Trader Dante, is probably the biggest sort of influence in terms of taking trading seriously and sort of my approach to markets, broadly speaking. And he was a Forex guy. And so listening to them, they've been in the markets for 10, 15, 20 years and really thought about these things and had a system as opposed to just drawing random chart lines, whatever it may be. And I'm like, oh, okay, so there's actually like something going on here. That like for me, it was, I had an interest in philosophy and always cared about like systems and top-down approach and that type of stuff. And a lot of the stuff that I was seeing in crypto Twitter, and mind you, I paid for a lot of it. So, I had like a pitiful amount of money as a uni student, especially when I just started, as anyone would, especially in London. And I was still paying like 0.1 BTC a month just for like one group, and then 0.05 for another one, and 0.03 to learn TA from this guy's PDF. And they were all garbage and they were all contradictory. They wouldn't even be internally consistent with themselves. And I just found the whole thing just like very frustrating. It was clear that not much care had been put in for this to be like a comprehensive, holistic resource. So I just had to look elsewhere and happened to stumble upon the Forex trading side of things, where people sort of thought about these things more carefully. And so I kind of went from there and then circled back to crypto, having established some sort of, basic price action base, if you will. And even that was a strange experiment, because I would come back and I would start, posting levels, just pretty much horizontal lines, which I learned from the Forex guys, being like, oh, this is support, this is resistance. And I actually got mocked. So by the then intelligentsia, if you will, of crypto Twitter, who were primarily sort of chart pattern traders or indicator traders, the fact that I was drawing horizontal lines, I was getting like genuinely memed on and dunked on, like, oh, what the fuck are you doing? This doesn't make any sense, yada, yada, which is very strange to consider now. So that's a bit of a long-winded story, but that's sort of it. Came into it, paid for a bunch of stuff. It wasn't very good. Looked for people who thought about it more seriously. Found Forex. I was like, okay, this makes sense. Came back to crypto, and that's sort of still here, I suppose.
Yeah, interesting. So how did you like get to the point then where you felt like confident enough to then like create your own content? Was that much further down the line, or was that actually like relatively early on? And then maybe like in your first videos, did you actually feel confident, or is that a thing that came to you later? Sorry.
Of course, yeah. I mean, look, initially these things weren't meant for wide-scale public consumption. At the time, for example, the Ichimoku cloud thing, which I get memed upon now, which I still think is like a decent trend-following system if you want to just kind of automate it and, think about it without really, it does a lot of the levels for you. So I think it's easier to test assumptions of the system. In any case, at the time, that was like a very popular way of trading because the market itself was trending, and it's a toolkit that lends itself very well to trending systems. And so everyone on crypto Twitter, that was kind of the trading zeitgeist back in the day of trading Ichimoku cloud. So I was like, okay, well, I need to kind of figure this out and learn it. And again, I went back to some Forex sources and just some other trend trading type of channels on YouTube from legacy markets. And then I developed kind of a baseline understanding of how this thing works. And then I had like maybe a few months, which at the time seemed like a lot, but in hindsight obviously is nothing, but I had a few months of like positive and successful trading experience with this thing. And when I made that video, it's because a lot of these Discord chat rooms and Telegrams that I've been in, people were kind of looking at this same toolkit because it was kind of the only game in town as far as the CT way of trading, if you will. But no one actually knew how to use it or what parameters to use or what this line meant versus that line or whatever else. And so I made that video initially so I could share it within the communities in which I actively participated. So when people would have questions like, oh, what does this mean or what does that mean or whatever else, I could just link them and say, I don't want to explain this for like the 50th time. So it really came from the fact that I was just sharing my own charts in these Discord rooms and Telegrams. People would keep asking the same questions. And I just thought, well, there's an easier way to deal with this and answer the same question every single time. I will simply just make a video and, I can just point people towards that. So that's kind of where that started. And obviously just, it was very well received. And at that point, I think it feeds your ego, which is bad. But also does suggest that there may be something there in terms of either how I present information or how it resonates with people, or something about my tone or whatever else that could be worth exploring. And I also believe in the cliche that you don't fully understand something until you can explain it in simple terms or explain it to a 5-year-old, 10-year-old, whatever it may be. So a lot of the times to this day, when I make these videos, they sort of just help me clean up my own thinking about these topics and make it clearer and, improve my own understanding. So there's still, 5 years later, it's still a very valuable exercise for me to do.
For like when you were, so the same for me, right? When I was doing like law and studying and before I got into any of this, did you ever imagine that you'd be making like content, especially like these video content stuff? So did you ever imagine that that would be your role? Or is it like you said, you made that first one and then it just followed on from there? Or did you ever have like this intention to make educational content?
No, there was no plan. There was no grand vision that this is what I'm going to do and it'll convert into this and I can funnel into that. That was never the case. I think for me, a lot of it also because of the timing of these things that I tried trading for the first time in markets in sort of 2017 and it went really well. And around sort of, I think the summer of 2018 or slightly before that was when I was kind of entering the final year of my degree, sort of 2017 to 2018, that sort of transitionary period. And at that point, it was just kind of hubris and arrogance thinking, oh, well, look at how much money I've made in 2017. You know, even if my portfolio isn't that big at the time, if it continues to scale in this way, I'll be Jeff Bezos in like 5 years or whatever, right? Sort of really arrogant assumptions about market conditions with no prior experience of market cycles. So that's kind of what gave me at the time the false confidence that I shouldn't pursue law and I should just trade and do crypto stuff. It wasn't even video related. It was just like, oh look, well this works and it's something I find interesting and there's clearly much more to it. I'm still learning so much, and I didn't have any baseline assumptions about like volatility or market cycles, any of the things that you ordinarily use to inform your high time frame view. And so that's why I kind of didn't get into the career, and I just thought I'll do this, and that was a very rough type of, because what followed was probably one of the worst bear markets ever. And the difference between that one and this one is that one seemed like a much more existentially threatening bear market. That like, this is a retail only market. All of retail came in and all of retail has been wiped out. So who's left was the question, and that was like very scary to consider with, volatility being dried up and all these ICOs gone to zero and prices at 3-4K, just everything's breaking, just like really scary stuff. But as far as the content stuff goes, no, it was just, it was almost an accident that I'm going to make these videos so I don't have to repeat myself. Okay, they're good. I guess I'll make a few more. And obviously, look, I'm not going to lie about these things. The dopamine, the engagement, the following. I'm like, oh, this is social status, and this is so good. It makes me feel all warm and fuzzy inside as well. But there was never any type, and there still isn't any type of grand funnel or vision as to I'm going to put it all into a course or do this on the other, this, that, or the other. It's very discretionary and based on my preferences, what I feel like, and anything else.
Yeah, it's crazy, honestly. Your story is like so mirrored to mine, just like on a larger scale. So so last year it would have been, I got into this like 2020, and then 2021, I naively, really, I didn't understand it as well as maybe I thought at the time. Bought like that crash back in May 2021, and then made like pretty good money from that going forward. And I remember because of that, I'm pretty sure. So I graduated from my law degree as well, 2021. And if I hadn't done okay at that point, like my close friends, my family, I don't think they would ever have believed in any of this. And then
Yes.
my like situation of then explaining, okay, that I want to work in crypto, I think they would have said is a load of rubbish, we would say, or trash or whatever. So it was actually the same thing. So like you mentioned, right, 2017, like you said, you made a load of money, and then it kind of brought legitimacy, I guess, to telling other people what you do. Was that the case? So like when you made money, or even did you tell anyone what you're up to in 2017? How did you eventually pitch to your family, especially like, okay, I'm going to be this crypto trader and this is what I'm going to do going forward, especially coming out of a law degree? Because I'm in the same thing, right? You do all this like super hard work on a law degree. Everyone expects you to go into corporate law. They've like invested time into you. So I think it was lucky that we both made money to kind of prove that we could do this. But yeah, what was your
that part
experience?
certainly lends credibility.
Yeah.
No pun intended. I was very lucky because for me, my family and sort of that element is very important. But but my father has a very good understanding of risk. And so I basically said, look, I'm going to finish my degree. I think there's something to this asset class. And I think also this is like a good moment. It wasn't. It was the worst moment. It was the Pico top. But my argument was this is a good moment to like get involved, get entrenched, get integrated, whatever else. And if it pays off, and this is like the nascent stages of a new asset class, I think the payoff will be sort of exponential and really high. And if it doesn't, I can always go back. I'm comfortable enough to survive that period if I'm wrong, but I can always go back to law if the whole thesis is completely invalidated. And that's kind of how I presented it. Sort of like I think there's something here, and I want to give it a swing. And even if I'm wrong, that doesn't mean the degree is somehow negated completely. I can always circle back and do something else. And that was accepted well enough at the time. And thankfully it sort of was borne out to be true. But yeah, I was very fortunate with my parents in that regard. It wasn't like terribly conservative. Oh, we all this money, that we've helped you with for this law degree and sort of all the time spent on your education, etc., and you're just going to do crypto Ponzi coins. What a waste. You should be a lawyer. It's not a real job. What are we going to tell our friends? All these social pressures that are very real and very material. Thankfully, especially from my father's influence, the argument was basically, he saw the case that if this is like a real asset class and it's going to be one in the future that will grow, etc., that there is an exponential upside to sort of participating in it and becoming entrenched in it. So that's kind of it. When it comes, the thing is, for friends and family are completely different on that front. I try to avoid, as far as possible, any explanation as to what I do to, aside from my 6 closest friends, it's a topic I try not to discuss at all. And so I avoid it as far as I reasonably can. And that's for a few reasons. One is just the reputation of the industry is sort of really bad, and is especially after this, it's only going to get worse. And I'm not an ideologue when it comes to these things. So I have preferences as to decentralization versus centralization, censorship versus a lack of censorship, and all these sorts of things. But fundamentally, I engage with the market primarily as a trader, and for me, that's volatility, liquidity, and all this type of stuff, momentum, and it's less so. I don't hold strong ideological positions when it comes to the space. I hold preferences when it comes to the space, given I've invested 5 years of my life into it. But I'm not going to try to convert other people to the cause, especially if I don't know them. I'm just not that type. No, I'm not going to proselytize people in general. That's just not how I live any function of my life. And also, like, there is like a one weird point of dissonance that you talk to people about crypto, and especially if you manage to do well on the back of it, they'll just say, oh, it's luck, or it's a fraud, or it's a Ponzi, or that's really easy to do. And my response, in my head at least, is always, why don't you do it then? If it's really that easy, and you see tangible benefits to it that would immediately improve your life and those around you with, in your perception, minimal work, minimal risk, and it's all rigged, whatever, somehow in the favor of the person you're talking to, why don't you just do it? And there's never any good response to that, because obviously those are kind of surface level deflection types of criticisms, albeit, given how our industry has transpired, quite a valid ones. So yeah, when it comes to family, they were just quite good at that time of understanding that maybe there's something there, especially from the father's side. When it comes to friends, six of my close friends just know, including the Cred persona part of things, which is odd. But anyone else, even like acquaintances or kind of childhood friends or whatever type of second order friendships, if you will, I try to avoid the topic entirely. And even if I do, and I say, oh, I'm a trader or I do crypto, the whole Cred side of things in crypto Twitter, no chance. You could torture me in some CIA black site, and I wouldn't give you a word. So that's, and also I think the final point I'll make on this is fundamentally, I have a lot of agreement with people that dismiss crypto or take very cynical and negative views on crypto. So I was having lunch with one of my friends and his father, who was like a traditional sort of, S&P 500 type of investor, like boomer tradfi basically. And he was like, oh, well, crypto is like offshore, it's unregulated, it's manipulated, there are all these Ponzi's, there are all these insider trading schemes. I'm just like, yep. It's like people expect, just because you're in the space, that you automatically are an evangelist of the space who wants to present some squeaky clean version. But that's not the case at all. So a lot of the time, even if I'm met with sort of extreme skeptics and cynics, they're often surprised to see that I think, if you're being intellectually honest, we hold much more in common with them than we'd like, certainly.
Yeah, I think that's the main frustration with the space, right? So it kind of attracts all these like terrible people, as we've experienced in the last few weeks. And I feel exactly the same on pretty much all the points you made. So like, when people try to talk to me and they say, oh, there's all these scammers though, right? Like, what about this Squid Game token? That's the one they always tell me about, right? The one that went to zero. But like, to everyone that's in the space, it's obvious these scam coins, but people who are looking on, they think that everything's a scam. But they're right in many cases, like you say. So I don't try to like defend absolutely everything. It attracts these type of people. And then in terms of like friends, I have the same experience, right? So I think I saw some tweet once before that summarized it, right? It was when you try and get someone into the space and they do well, it's all on them, right? They say, okay, they've done amazing, it's down to them. If you try and get someone into the space and then they lose money, it's all my fault. So it's either their success or my fault. So I've learned to, like you, I think really similar. I tell like my best friends what I get up to, and then most of the time I try and leave it out. But yeah, so I want to ask you like more specifically about trading, right? So last year, obviously everything was pretty much amazing. Most of the time it was up only. How did you, or when was the time where you thought, okay, things look terrible? because I, like you, I have really done like barely anything crypto, trading, buying anything. I saw this year as pretty much a write-off quite early on. I thought the macro looked terrible. I don't really chart like you do, of course, but I just saw that the year ahead was probably going to be awful coming out of COVID. I was like, it's probably worth sitting out and not really buying anything. And I remember like thinking last week, there's been various pumps going on that I missed out on as well. So like I missed maybe like half of that run up right before the merge, because I was just thinking to myself, this is gonna go back down and whatever. I was kind of coping the whole time, thinking this isn't going as I thought. Like I don't think this is gonna happen. But most of the time I've sat out of it, and I think it's still been a beneficial strategy. So I'm probably gonna agree with you. And because actually, if I made money at that time, I probably would have invested more. I might have ended up like with money on FTX or whatever. So when did you start feeling like, okay, this year is, or this period, whenever, is a time to just sit out and kind of watch and wait for setups?
Yeah, so it was a few things. First of all, it was technical, and that comes in two forms. One is that I treated the all-time high breakout or the breakout attempt with utmost suspicion and also a fair degree of contempt. Because for me, if it's going to be a real all-time high breakout in a trend-forming fashion, it should look a lot like 20K did, where the market just disappears and then it's a melt up, frankly. Whereas if you'll recall, what we had was nothing of the sort. The market sort of poked above the previous all-time high, and then it did nothing, which for me was very, very strange. Because even from a basic microstructure point of view, it's like anyone who's ever held or bought Bitcoin at that price, they're technically in profit. I'm like, who's selling this? Like, why is this being sold? No one's underwater. You know, if it's a real kind of all-time high breakout, if anything, that should induce new buyers into the market. Why isn't it moving? And that to me was very odd. And you can find like public discussions I was having with people where I was like, look, are we being terribly complacent about this type of thing not going anywhere? Or are we being impatient that it simply hasn't moved quick enough relative to what we're used to? But that was kind of the first red flag where I was like, this doesn't look like an all-time high breakout should. The other concern I had at the time was for a lot of people, the base case was this is a standard all-time high breakout, which isn't unreasonable. And then the market's going to do what it normally does on all-time high break, which is go up like, a lot, frankly. And then and this is off the back of like a lot of DeFi stuff and, the NFT space going crazy and all of this. And their targets for Bitcoin were like, one classic one that stuck in my mind. I heard the target 1, 2, 3, 4, 5, 6. That was the target for BTC. And then for me, it was just intellectually, from just like a cycle point of view, very difficult to fathom that the market could go to 60, go to 30. By the way, that's the worst we're going to have for the entire cycle. And then we simply run it back like less than a year later or whatever that short period of time is into like, doubling the market cap again, and NFTs go crazy again and DeFi goes crazy again. And that to me it just strained my kind of confidence. And I found that very difficult to subscribe to, especially if you consider kind of what people's benchmark for a bear market was. I was there in 2018, 2019, 2020, and so on and so forth. Like, I know what a bear market feels like, not only price wise but also volatility wise, and more importantly than all of those, time wise. Whereas one of the prevailing narratives at the time was that the pullback to 30K, that was the bear market and that was the correction, and that just didn't match any mental or even sort of historical models for what that might look like. So that's what it started with, the kind of the lackluster all-time high breakout. I was like, this something's wrong here. One of the kind of core, I suppose, assumptions of my trading system is that bullish patterns that fail are bearish and bearish patterns that fail are bullish. When you have something where the chips are completely stacked and the deck is stacked and whatever, and it doesn't go through, well, then why not? And often the answer is because the opposite thing is going to happen, or there's some overriding or overwhelming force on the other side of it. So the all-time high breakout is a perfect example of that. Everything is bullish. But why isn't it? So that was the first thing. There was a bit of technical follow through on that. Once the market actually broke back below the kind of breakout point at 58, 60K, I'm like, I don't like this. But, if this were an hourly chart, I would target the range. It's a range high. If it's an hourly chart and it broke out and failed, I'd usually target the other side of the range. This is like completely reasonable, well-established sort of auction market theory, or whatever you want to call it, sort of technical, a very technical premise. The issue at the time was that range low was around 30K. And so even already there, I was like, okay, if I take this to its full logical conclusion, this is like really, really bearish. Because not only is it a failed kind of breakout in the technical sense, but it's one that took place above a prior all-time high. If there's any single point where a breakout shouldn't fail, it should be at the all-time high, because everyone's making money, everyone's in profit, whatever else. So the fact that happened was really bad. There are a few others, and I'm fortunate enough to keep like a Discord journal, but it's just for myself, where I just throw down my observations at the time. So one thing I could do is I literally before this call went back and scrolled up for that kind of November, December, January type of period to see what was going on. One of the things that happened around February, which sort of gave me even more conviction, is that I think when the market went to like 52K or 55K, whatever it may be, the global open interest on the market just got completely fucking axed. Like it just got wiped out. To speculators en masse, it was the biggest kind of notional and I think percentage reduction that we'd had in open interest in a single day. Now, I argued with so many people on this point, including, whatever, I'm not going to name drop, but like that for me was a big deal. Because generally speaking, on sufficiently low timeframes, there's this understanding of markets that if leverage, quote unquote, resets, that's bullish, right? The people who are short-term over, whose positioning gets taken out, or they're far too aggressive in the market dips, they get wiped out, and that kind of resets the cycle, if you will, and you can go back up. The issue is it never works when you're talking about really, really large displacements in open interest when it comes to the crypto market. Because the issue is at that point, you've just killed all the speculators. And so while on a micro time frame, you can make the argument that this specific band of participants being over leveraged and taken out is bullish and can reset, generally speaking, and you can go on Coinalyze and just get the Bitcoin chart and then look at aggregated global open interest or whatever that kind of metric is called, and look at where the biggest wipeouts in open interest have taken place. Those have never been a precursor for trend continuation. They've always been a precursor for trend reversal. So at that point, I'm really bricking it. So I'm like, we've done the all-time high failed breakout, didn't go anywhere. We're back inside the range, and we just saw all the speculators get completely carried out on a stretcher. And all of those things were quite scary. There were a few others, for example, you'll recall that the prevailing narrative at the time was that Bitcoin and ETH didn't matter, because Bitcoin and ETH had basically topped and been going sideways for some time by that point. While
the alt season.
It was the alt season. And people took that to such an extreme, saying, well, why do I even care about what BTC and ETH are doing if my altcoins, if my jewel is up, whatever, 10,000%, and this, that, and the other is up 10 million%. And historically, that's just been a very, very bad indicator when market participants don't really care about Bitcoin and ETH, which are, I think, for me, the benchmark of risk and larger inflows into the space. When those aren't going anywhere, and they're far too big to be continued to bid up, or maybe they're even being sold into, and the only flows in the space are on the extreme kind of frothy retail front, that's not what you want to see. You want to see a healthy dispersion among the market, especially kind of early in the cycle where Bitcoin and ETH are bid, and then eventually you kind of, the participants who bid that, their flows trickle out further on the risk curve towards altcoins, NFTs, metaverse garbage, whatever you want. But you want to see that kind of arc on the risk side of things take place. And what you don't want to see is really massive dispersion between the majors, BTC and ETH, and altcoins, especially if BTC and ETH look weak. And then the only flows that are in town are those altcoins type of thing. That certainly gives me room to pause. And also the ETH flipping stuff is also like historically a very, good risk off signal. I think that'll change at some point. But for the time being, every time you see like, oh, flipping and Bitcoin doesn't matter at all, and not only does it not matter like objectively, but also relative to ETH, it doesn't matter because it doesn't get flipped. That's always been quite scary. And I think what kept me out of the market, and it's still the case for now, although I'm sort of desperate to get back in, is after that, there were kind of a lack of bullish signals. So it's not like anything special where I was like, oh, I'm going to sell, between 55 and 58 or whatever, somewhere in the 50s. And then, I'm going to rebuy sub 20K, lol, come back here in 2 years, whatever. It wasn't that. It was the case that, okay, I got a bearish signal and I can get back in if I get a bullish signal, rather straightforward. The issue is I didn't get one all year. So I thought, okay, maybe if when the Luna Foundation Guard was buying Bitcoin above, 40, 45K, that looked like a breakout. And I'm like, okay, then when that breakout failed, because the whole thing looked very suspect, I'm like, okay, that's a failed breakout setup, which is bearish. But if it gets back above 40, 45, I can get into the market, which is nice. It never did that. Then the market gets to 30K, which is the original target from the 60K all-time high failed breakout. And I'm like, holy shit, that's like a 50% discount. This is like a really big level. I should really be open-minded towards doing business here. And the market just puked through it, frankly. So I never got any good signals there. Then we got to 20K, and in a sort of similar vein, I was looking for entries. And again, I missed the entire merge rally for that reason. I just didn't get the right setup. But I was waiting for something that at least for me would look sort of technically actionable, but I never got it. And, here at sort of 16, 17, wherever it is, these are very cheap and discounted prices, but I'm still waiting for a setup. And if that means I'm later than the bottom, that's fine. If that means I have to wait longer, that's also fine with me. But to answer the original question, what was the shit looked bad type of stuff? It was very technical, also some structural stuff with regards to open interest. It was the complete apathy to Bitcoin and ETH. And then it was also became obvious that the macro started to matter. And for me, the way I phrased this quite early on in the sort of 50 IQ bell curve meme was that easing good, tightening bad. And it seems like the easing good part had finished, and we're on the tightening, and at the beginning of the tightening bad part. And I'd also heard from legacy traders, God bless them, that the saying "don't fade the Fed." And I didn't really know how to take that literally, because conditions for my entire trading career had always been favorable from that point of view, from the monetary policy and accommodative policy and that, perspective. But now that wasn't available, so I kind of stuck to that. And the final point I'll make, I think intellectually, I made this analogy as well. If you consider what kind of bottomed the market and when the market really started going up from 3K, 4K, 5, 10, 20, etc., we had incredibly accommodative fiscal policy and incredibly accommodative monetary policy. And so just a ton of risk premia and room for speculation, both from a central bank point of view, but also just like household savings. Like I know in Britain, for example, around that kind of pandemic times, household savings had been the highest since I think World War II or something, in the 1940s or 1960s, something crazy like that. And the question is, where are those flows going to go? And just the abundance of liquidity in the system and whatever else. The issue is, after at the start of this year, it was the exact same conditions, but almost in the opposite way, where households were completely squeezed. You're not going to find any saviors or inflows from there. And also on the institutional side, when it came to macro, monetary policy, whatever, it was almost the opposite of the pandemic sort of policy of zero rates, infinite liquidity. Let's get this baby moving. Whereas now it's like, oops, we messed up and we're late, by the way, to the whole inflation thing. Oops, our bad. So let's tighten in the fastest rate that we potentially ever seen. So that was kind of it. I think the last point I've got here is that I think I tend to get very risk off when altcoin narratives get very PvP or extremely technical and sort of sophisticated. And you can see that in one of two ways. Oh, there are a few ways, actually. One is when just alts start flipping Bitcoin and ETH by volume. That tends to be very scary. It happens during like very asynchronous events, and in certain small windows, it's fine. But in general, when you see like ETH volume flip that of Bitcoin consistently, and then Dogecoin is above both of them, and you could actually, I remember, like, I can visualize the chart when I close my eyes. Like Bitcoin and ETH were like purely inversely correlated to Dogecoin. It was like literally sucking out all the liquidity in the system. And I'm like, that doesn't seem right to me. And then as far as the narrative complexity goes, like easy and understandable and digestible altcoin narratives are good, because you don't need a terrible amount of sophistication to explain them to retail or whoever the new entrants are. I remember specifically that I got worried when I just couldn't keep up with what the altcoin narrative was, because my friends were sending me these articles on the curve wars, right? Curve wars, bribing on chain, all this type of stuff. I'm like, how the fuck did we get here? I was just trading Dogecoins and Sam Solana good and all this other stuff, and now we're in the most kind of opaque altcoin type of market structure I'd ever seen. So it's all those things put together where I was like, I don't know, I will at least wait for something. And then, to be honest, I got lucky to some extent that waiting served me well, because none of the stuff that would ordinarily get me back into the market did so.
Honestly, all of those things, it's amazing that you do like a journal, because all of those things, it's crazy when you say them again. I remember feeling like so similar in all these situations. I remember like the alt season. So like when Bitcoin topped, right, everyone was saying like, oh, this traditionally means now that there will be like an alt season. So everyone was sitting. Even at that point, I remember thinking like, this feels a bit uneasy, but I remember feeling like, okay, there'll probably be something at least, even if it's not amazing. So then I was sitting thinking, okay, surely there'll be this alt season. That never came. So then I held too long at that point. And then I also remember, I think I sold majority or like most at this point anyway, but I remember Do Kwon buying, like you said, and like LFG buying Bitcoin. And I was thinking, am I going to fade this? Like you actually did believe Do Kwon would do this type of thing, and it seemed legit at that point. So I was like, okay, maybe I'm an idiot for fading this, but I left it. And then the same thing you mentioned, like, the flippening, it's sad because I'm probably more of an ETH maxi. But every time there is like this narrative, okay, the ETH's going to flip Bitcoin or whatever, every single time, that's almost like the perfect time to sell, like you mentioned.
Yeah,
and then
it's a rough one.
Yeah, and then I think the other thing, what I found was really, really noticeable, and like you kind of touched on, I don't know if it's just like because like where I live specifically in the UK, and like, or it's just the UK, but I could really feel that like stuff was not good. So like you mentioned, last year was crazy. Everyone had loads of money. Like even in England, right, they were paying us to go eat, like to go and eat in restaurants. It was ridiculous. Yes. So like you had so much money, and there was like this crazy money flow. Rates are really low. I knew that there was going to have to be some pullback, especially maybe I've always been into like politics and probably a classic boring English person. But I knew that there was going to have to be like a retraction. So I was like, this is probably going to be 2022. And then you could feel, right, like in England, maybe more than other places, but maybe London, I don't know what it was like, but I could really feel that like the energy prices and stuff were just ridiculous. Like it was like tripling. And I think I said, I don't know if they're listening, I remember messaging this guy from Pudgy Penguins, and I was saying like, I think we're like screwed here, because I started to feel like there's people with Bored Apes worth like 500k, and I started to think like, I think they're just gonna start thinking to themselves like, people can't afford. I remember seeing like the US rent price or something was like the highest ever, or it like doubled or something completely ridiculous. And I remember thinking like, aren't people going to start sitting down or whatever and start thinking like, I own a $500,000 ape? Like, this is so detached from reality. So I actually became especially bearish on NFTs, to be honest. I started feeling like NFTs to me like epitomize consumer confidence, right? You're not buying, like even myself, you're not buying a penguin or a Bored Ape, or people are still, but you're not buying it for the prices that they were going at, like 500,000 and ridiculous money. Like, you don't do that if your energy price is tripling. So I started to feel like there is like a lagging behavior going on. People are still doing it despite everyone becoming poorer and poorer. And I thought there was always like this good quote about like interest rates, how like interest rates basically dictate the whole market. So it's like they float when they're low, everything floats when they're low or zero, and then everything like constricts when they're high. So
Yes.
it's kind of like a very good indicator, I thought, that everything is just really down bad. And I knew like the rest of this year, but then I think the same as you, right? I start seeing these prices, especially like FTX and all this happening, and I start feeling like, surely, like when am I going to enter at this point? Surely it's around now, is my thought process, because it's like mass panic. And I hate that chart, if I'm honest with you, the one that's like anger, fear,
Oh,
depression.
the Wall Street cheat sheet. Yeah, timeless classic. Yeah, yeah.
I hate that, because I remember, like you said, when it was like 30k Bitcoin, I remember everyone, even back then, they were calling it like, oh, this is anger, this is depression. I was like, yeah, I think you're crazy. And then now, like, I start seeing this and it's saying like depression and whatever. And for the first time ever, really, this meme Wall Street chart actually seems to like be applicable, because you can see like the emotions of like pure anger and like depression recently. So I'm thinking, okay, maybe this is a okay time. But yeah, it's crazy. Maybe I should also write down notes, because when you look back, I kind of forget these things. Everything moves so quickly in the space. But then when you look back, there's actually so many lessons, right, to learn. I'm guessing that's why you write these things down, is it? So you look back and then you can
For
relate
sure.
things.
Yeah, yeah, absolutely. It's there for. Well, I think I don't trust humans' sort of account of the past, especially if it concerns money. I think we like to romanticize narratives. I think we like to view ourselves in perhaps more generous terms than we deserve. We like to sort of inflate things, conflate things. We just like to get it wrong, especially if we're asked to reflect what it is like after the fact. Whereas for me, I want to sort of present an accurate, in the moment, first person sort of chronicle of what's going on at the time and my thoughts on it. And I know that it's accurate because I haven't got my rose tinted glasses on or my hindsight sort of bias 2, 3, 6, 12 months later. So I'm always doing it in the moment. And, you know, I still need to write my notes for this type of end of year type of things because I haven't gotten around to it yet. Still chasing headlines like a dog. But yeah, it's an incredibly helpful exercise. Probably the one thing I'd recommend to anyone, regardless of what you think of me, trading styles, TA, not TA, whatever, altcoins, Bitcoin, doesn't matter. You'll benefit greatly from trying to be a kind of historian of the moment you live in right now. And whatever, especially given what the industry is going through, I've just found that to be a massively helpful exercise. And also just like a couple of anecdotal things also matter. Like, you know, a lot of the arguments that I made for things that made me conservative at the end of last year, you know, you might think, oh, this is very well reasoned, it's technical, and there's some open interest stuff there, and he's sounding intelligent. Not all of it is. So, for example, one of the things that had me a bit concerned, I was like, man, 60,000 is a lot for just one Bitcoin. That's like a bit mad, you know, and that's like, that doesn't stand any empirical scrutiny or whatever else, but it's just one of those gut instincts and senses you develop from being in the market for so long. And similarly to the point of, was the move to 30k a bear market? It certainly felt like a bear market to a lot of people because, like, specifically the one sort of last summer, right? Or in 2021, that's what I'm referring to, July 2021, etc. For a lot of people, that was like the bear market, but it didn't align with anything sort of price-wise, emotionally-wise, cleansing the space, market structure just didn't make any sense. Whereas if I still had some at least mental notes from what it was like in 2018, 2019 bear market. And to me, those two things weren't just different, they were incomparable. So I couldn't subscribe to that argument. And also, look, I'm sorry to be like almost colloquial and facetious about this. Like, it took 2 weeks for the market initially to go from 60 to 30, and then it bottomed. Are you in good faith going to make an argument for a 2-week bear market before we then go from 30 back to 60 and then to 120,000? Like, to me, that was just absurd. And also the degree of greed was absolutely crazy, because I remember I kind of lost track of the space to some extent, especially when NFTs were starting to kick off. I kind of opened up Twitter and someone's done this thing called a mint, and suddenly they have like $10 million in the treasury. And I'm like, what is going on? Like, I didn't have an understanding of how you can create such large sums of money ex nihilo. And then I don't even, like, at the time, understand the mechanisms of how you've done that. So yeah, and also there's so many other signals that I use. Like when Dino coins start pumping just out of nowhere after Bitcoin's gone to 60K and Litecoin goes up like 500%. I'm like, this is bad. When certain crypto Twitter trading guys who I know just like are very bad thinkers suddenly start becoming like VC investor, I've partnered with this project. I'm like, you can barely tie your own shoelaces. I refuse to believe that there's some sort of like useful, fundamental venture level insight that you can give to these projects. And also just the classic stuff of these Rolexes here and there, people saying if you've made like $10 million isn't enough to make it, and all this other stuff. I'm like, you're all mad. You're all mad. So yeah, a lot of it is technical, a lot of it is market structure based. I try to be intelligent about it, but if you spend long enough on this platform like I have, human psychology doesn't change, and the same apes, and I use that term affectionately, do come about at the inflection points. And if with enough focus, you can certainly spot them, and try not to be one of them at the very least.
Yeah, I think it's the cliche, right? But I definitely felt it myself as well. Like even last year, when I was like around my like all-time high portfolio value, I remember you still have this thing, right? I was screenshotting my portfolio each day, even if I wasn't showing people. I was looking at myself like, "Wow, this is ridiculous," and I started feeling like, "Oh, I should buy this thing that I would never normally buy." Like I remember I was looking at watches, and it's so dumb. Now I look back, it's like obviously I don't even care that much about watches. Why was I looking at them? So I always find that as like a lesson, right? So if you start looking at stuff that is not even what you're interested in, and yeah, screenshotting your portfolio, these are obvious signs that you should probably get out of there.
Yes.
I want to ask you, right? So 2021, I was naive at this point anyway, and I think I've always maybe been like, so I see everyone memeing, right, on these like macro podcasters. I don't listen to macro podcasts, but I always look at the news, maybe overly or whatever. But back then, especially, right, because I come out of like always being really interested in business. I did like a business undergraduate. And I remember thinking like when that crashed, there wasn't that much signal to me in terms of like the economy. It didn't feel like the COVID pumping money stuff had happened. I didn't really understand that crash at the time. So that's why I bought it, because I felt like there wasn't that much environmentally that felt like this should be like the bear market or whatever, my understanding of it back then. So how much, so you mentioned as well, like you did law and like you wanted to look at like business awareness. Do you kind of push that stuff right to the side now? Or so like, how does macro come into your views? Is that like a second thought to like technical analysis, or is that always just like an overarching thing?
Yeah, that's a very interesting premise. I think overall, it's impossible to deny that larger flows across risk markets and markets in general have been macro driven, especially now, sort of this year, more than ever before, at least in the public consciousness, and also just been the biggest shift in policy that we've had, at least in our lifetimes. And the basic test for that is if you look at the analogs that are made when the macro podcast stores, do their podcasts or write their newsletters. Well, what periods of time do they write about? They write about the 70s and 80s stagflation. They might write about the 50s. They might write about the Great Depression and all this type of stuff. So that in itself is important because it shows that we're clearly in some abnormal conditions. If you have to reach back 50, 80, whatever, 100 years to find a reasonable analog to what's going on right now, then by definition, you're in exceptional circumstances. I think that's important. The second point I'll make is I think it's important to be conscious that these types of rapid tightening cycles, how many are you and I going to see in our lifetimes? It's not clear to me that it's going to be more than a small handful. This isn't normal, right? We had like black swans on one side, black swans on the other side. It's been completely absurd. Oil went bloody negative. I mean, what are we even talking about, right? Like it's quite clear that the macro conditions that we've had over the last 2-3 years have been completely anomalous compared to the history of markets in general. And so that is in some cases a privilege, because especially if risk assets get completely battered and everything gets wrecked in our lifetime, how many tightening cycles are we going to see? The answer is not many. And if we get extra discounts or evaluations that we wouldn't see under ordinary circumstances because of these conditions, then should we be so lucky to take advantage of them? Those are kind of the main two things. In terms of how much I follow it now, there is a certain irony that now more than ever before we're focused on macro. However, at the same time, the market is just about as technical as it has ever been. And that applies both to crypto and to the S&P 500. So in terms of just like basic downtrend rules, support, resistance, whatever, those markets have been a doozy. They've been very generous for people operating on higher timeframes in terms of informing them of trend and market structure and all those other things. So that's the irony. We're more focused on macro than ever before. But if you were to almost pretend it didn't exist and purely traded the chart, you would arrive at very good conclusions. And there haven't been like big periods of divergence or fake out signals or whatever else. It's like, hey, macro is bad. And by the way, the technicals are trending down as well, like very clearly. So even if you ignored the entire macro thing, maybe to your peril, I mean, I think overall it's a good in itself and a useful kind of learning exercise. So I've kind of appreciated that. But it certainly hasn't been a prerequisite to have a good understanding of what's been going on in the market. The final point I'll make about macro is that I would be careful, because every bear market brings its own form of bear market PTSD, which then hampers the amount of money you can make when the conditions improve. So for example, for me in 2018, 2019, and sort of my cohort that traded through that bear market, we had BitMEX PTSD, which is basically that whenever you'd get a breakout or a big move or the market moved, we were in the most sort of brutal mean reverting conditions ever. So you wouldn't trust a single breakout to save your life. You'd be like, oh, it broke out. The next candle is going to reverse it completely. Oh, it's going to bar. It's a deviation. It's a failed breakout. Like, we were completely terrible trend traders because we didn't have a trend to trade for like 2 years. And the one we did was just, we had like 2 weeks of down and then 3 months of sideways. So we became mean reversion experts. But then if you enter an uptrend like you did in 2021, and you're like a specialist, if you will, mean reversion trader, you're having a really fucking hard time when everything is trending and you're only used to fading moves. I think, to bring it back to macro, it's very likely going to be one of next cycle's form of PTSD, where we're sort of back in risk on mode. People are just aping stuff. Everything is trending. The rules of the game, if you will, are reinstated, but people are still attached to macro and they're looking at yields and the 10-year and the dollar index and CPI, PPI, PCE, all this other stuff, and sort of refusing to acknowledge what's in front of them and failing to participate to the extent they should in the uptrend because they were caught so flat-footed by macro in the first place. So that's kind of at least my operating assumptions for now and for the future.
Yeah, that person will be me. I 100% know. So I've like embedded into my thinking, right, that I am always overly bearish. Well, this year I've always been overly bearish. So I'm normally thinking like we can go lower when actually we end up going higher. So I try and embed like I try to go for like an 80% of my actual, like what my heart tells me. I try and lessen that a bit. So I want to get your take, right? So I look at charts all the time as well. And I think people kind of underestimate. They say like, oh, crypto is a Ponzi. They look at these charts that are ridiculous. And some of them are insane. But then if you go back and of course look at like tech stocks, especially over the last couple of years, they're completely ridiculous as well in exactly the same way. And then how does someone, I've always been interested. So when I look at the S&P, and I remember talking to CMS intern, like the first episode I did of this series, and things were nowhere near as bad as they were now even. And I remember thinking like, how I don't know how you could think that the bottom was in when you look at the S&P, because the S&P chart looked absolutely awful, right? Like the support lines on an S&P chart at the moment, it seemed comical to me. Like it's just been like an up only for decades, right? So how do you take that S&P chart? How do you chart that? Because there's not really much going on other than like up only. And do you find it like kind of insane that everyone looks at crypto charts? And then even if you look at like Amazon, right, Apple, all of these charts are ridiculous. And so why did they not get the same viewpoints?
Yeah, I think you touched on the first argument that I would make, where it's if you have an inherent bias that crypto is like a Ponzi and that there's no value there or whatever, and especially if you use pejorative terms like it's just a pump and dump, then when the price chart reflects what looks like a pump and dump, you're just going to feel validated in that analysis, and you're not going to look into it any deeper, which is completely fine. But then if you look at Meta, if you look at Carvana, if you look at a bunch of legacy stuff, Roblox, all the SPACs, Netflix, like none of those look terribly good. And especially if you go out further on the risk curve, like I said, the micro caps and the SPACs and sort of our NFT equivalents, if you will, those look just as scammy, just as pump and dumpy than a lot of crypto stuff. So thank you, Mr. Gensler, for protecting us, so to speak. There's no difference there. When it comes to anchoring levels in a trend that's been unbelievably one-sided, what I've essentially, you have to concede two things. One is that you may be forced to engage the market on lower timeframes, because that might be the only time frame on which you actually get some form of structure. So if you look on a 3-month chart, it'll just be like green candles and red candles. There's nothing there. If you take it down to a monthly, maybe you see a bit more. If you take it down to the daily, maybe you see even more, and then you can sort of scale it from there. So that's the first thing I would say. Timeframes kind of answer a lot of those concerns that there's nothing here. Yeah, there isn't really, but there can be on a sufficiently low time frame. And the second part of this, the corollary, will also make more sense, which is that when you're assessing a market that's been very one-sided or been in a strong trend, and you're trying to determine levels, especially if you don't have a bunch of historical anchoring for it, given it's all unexplored highs, unexplored lows, whatever, what you have to do is drop your requirement for what constitutes a validly tradable level. So, for example, if under ordinary circumstances, you might want to see 3 months of price action, and you want to see 3-4 tests, and just like a market spending a lot of time there and like a really clear shelf, and then it breaks from that, and then you're like, well, this is a level as clear as ever. You have to lower your standard for what constitutes a tradable structure in those conditions, and you have to just basically intellectually concede that I'm not going to get a lot of structure, but the structure that I do get, I have to take seriously, because frankly, there's nothing else, and everyone else is going to be looking at that. The classic example is actually on the S&P 500 sort of monthly chart, for example. There's a single red monthly candle that we had, the open of which is sort of the 1st of January in 2021. Now, on its own terms, that just looks completely innocuous as a structure, because I'm sorry, you have 20 green candles, and there's just one tiny outlier red candle. But as comical as that may seem, at least in our technical roundup stuff or whatever other stuff we published, we use that as our anchor for support, frankly, because there was nothing else. And then if you were to look at the price action around that level, that actually ended up catching the first dump, and then it was also support on this most recent retest. Now, that on itself, I realize how absurd it sounds. I found one monthly red candle. I've used that as a structure, and the market has traded very well and very clearly around it. And while under ordinary circumstances, I wouldn't give much weight to this type of stuff, you have to, because you haven't got anything else left. If you go on higher time frames, there's simply nothing there. And if your requirement for what constitutes a tradable structure is too high, then you'll have nothing there either. But there has to be, almost making a cosmological argument here, something rather than nothing. So in those types of scenarios, you have to just lower your bar for what it means to have a level worth trading. And the same applies to Solana, for example. Like I have to technically have a level around the $15 handle on the weekly. Now, what exists on the Solana weekly chart around the $15 handle? Just one single red candle. But where did the market sort of slow down and retest, and where is it consolidating now? It's around that same thing. So that's and look, this is something I very much struggled with, because I learned from the Forex guys. And for them, there's no shortage of history, right? There's no shortage of levels when it comes to support, resistance, structure, time frame, whatever else. But you just have to make do in crypto. And sometimes that means potentially doing business at less well-established and dodgier structures. But you have to do business somewhere rather than nowhere. And I'd rather, any day, I'd take a bad-ish level rather than no level at all. So that's kind of where I think legacy charting and charting a lot of these can make sense, is if you use a sufficiently low time frame and you lower your bar for what it means for a level to be good, or a kind of chart structure worth considering.
Okay, that's really, really interesting. Do you have so in a similar question, I guess, do you have a particular setup that you've always found to be your favorite, you always go for? And then in the same way, has that ever ended up in do you have one significant trade that always sticks out to you as your best one? And then maybe a question after would be have you got one that always stood out as your embarrassingly bad trade?
Yeah, sure. In terms of setups, I mean, it's rather straightforward stuff for the most part. It's definitely reflected in the body work that I've put forth, especially recently. But generally speaking, my core assumption tends to I try to trade at levels. So if I think the market, I'll find an area that's at least in the past been significant and make some sort of inference that it may be significant again in the future. Or if the market's proving me that there's some stickiness to this price, I'll take that seriously. On the low time frame type of stuff, I'll find these high time frame levels, and I'll look for really scary moves into them to fade. So, classic example, the first time we tested 30K coming down from 60, I was a buyer sort of 30 something. There's a tweet there somewhere. But the point there was it's a high time frame level, but the low time frame price action into it looks absolutely terrifying. Like I've got high time frame support, but the market looks like it's about to go to zero, but it's retesting that level. And I'm going to fade those people all the time because they're that's the panicked flow that's doing business where over enough trades it has no business doing business, so to speak. So a lot of those kind of trade setups for me is identifying, which is a very easy process, high time frame structure, and then I will look for the market on a low time frame to look really shit and scary at support or really good and bullish at resistance. And it's at those extremities where I like to fade and do business for the most part. And I guess a corollary to that is when you have these high time frame levels, price isn't always super clean. It's not like I've drawn a line, it'll come into it, it'll wick perfectly, and it'll go to zero. Like the market's a messy mistress. It'll give you fake outs, it'll give you failed breakouts, it'll try a certain structure and fall back below it, what have you. And that's sort of what led to my another core premise of my trading, which is pattern failure. So stuff that should be bullish but isn't is bearish. Stuff that should be bearish but isn't is bullish. So a lot of the time, if I have something that looks like a really strong breakdown, it's completely nuked through the level, lower low, whatever, but then creeps up and eventually makes its way back above it and sort of reclaims it, as it's now popularly called. I like those types of setups, not only because they're technically clear, but they're also kind of there's a microstructure logic that applies to trading around trapped traders, which is that for example, if the market moves below a level and then sort of moves back above it, if the level is significant enough, you can assume two things on that move below: the existing long positions for that market are gone, right? So they've been stopped out, but also that you're going to have a bunch of sellers enter on the breakdown of that low because, whether be that for momentum continuation reasons or just for whatever purpose. Market makes a lower low, that's bearish, people are going to sell. From a market structure, from a microstructure point of view, if you're a seller and you need to close, you need to buy. Right? Like if I have -1 contracts and I want to get that's a short and I want to get to zero, I need to buy a contract to close that position. So a lot of the time when you see the market trade through these key levels that may induce participants to kind of try to tag onto the move or trigger momentum, whatever it may be, and as the market moves against them, I know that they're going to have to do one of two things, which is either close their position, which ends up being buy pressure, or get liquidated, which also ends up being buy pressure. So not only are those setups kind of failed breakouts and failed breakdowns, not only are they technically clear to me and they stand out on a chart and give you a very clear invalidation, but also if you understand how positioning works in the market, that they give you some sort of extra juice and extra boost because that the people who sold below there, the market is just made up of positions, right? And it just so happens at those particular junctures, those positions are trapped and they have to do something about it. And a lot of the time they have to do something about it with some degree of urgency. Because whether the price is approaching their liquidation price or they have to close or they're underwater, I like trading voluntarily where people are forced to trade. Where people trade involuntarily. And so if I have the choice of stepping on the neck of a trapped short with my long, I'll take that trade. And that's why a lot of these trapped setups unveil in that type of fashion. Not only do you have trapped sellers below the low, but you have people like me who are bidding it up to push them further into position of distress, and it all just cascades into momentum. So that's really the basic stuff. When I'm trading levels, I like to trade them at the extreme when it looks really scary, because I'm generally very close to my invalidation when I do that. I'm either almost immediately right or I'm wrong. And if I'm trading type of failed break setups or pattern failure, I'm trying to take advantage of people who've sort of ended up in a rough spot and have to do something about it. In terms of good trades and bad trades, in terms of the good ones, I think one which cemented my desire to be in crypto was the whole ant shares to Neo type of trade. Neo, the Chinese Ethereum, as it was then affectionately called. This popular Reddit coin back in the day as well, which is why I bought it. I bought a bunch of that and then ant shares at the time. Then it turned into Neo and it pumped like a zillion X. And look, the amounts in terms of the money or the notional P&L, whatever involved, wasn't a lot because this is like 2018 uni student arc, whatever it may be. But just in terms of the percentage return and the speed at which it developed and kind of the impact it had on my portfolio, I was like, holy shit, I want more. So in terms of like setting the addiction or showing me the potential of crypto or what it's like to ride a Ponzi rebranding pump, I think that trade was very formative in getting me interested in the space. As far as the worst trade, there's one that I recall where I was bearish ETH at like in the 400s or the 450s, and that was around, this is like proper back in the day. So this would have been in, let me see, around sort of after the bottom, basically. So sort of in 2020, as the market started grinding up, I'm looking at the ETH chart at the time at around yeah, this would have been August, September 2020, and there was a big monthly level on ETH going all the way back to 2017 in the mid 400s. And I was like, well, this is a mega level. You know, this is like a really big deal. And the issue is, not only did I short that level and obviously got blown out, but I was locked in that bias even after getting blown out for way too long. Where I was like, oh, this is a monthly level. Maybe I was early and maybe I'll have a chance to get back in. And I had this like very entrenched bias that this level was going to do something. Whereas if I were objective, I would have said, look, I took the best setup available. Hey, you know, cred from the past, but bearish setups that fail are bullish. I should have been like, holy shit, if this level didn't work, none of them are going to work, and long and ride the whole thing up. But I was basically stuck in, you know, mid 400s ETH short PTSD mode until the market like more or less doubled. If not, you know, or around there. And so that trade not only sucked in itself, but also sucked in terms of the kind of mental attachment I had to it and the subsequent opportunity costs from missing a large part of that sort of bull market formative leg. That one definitely stings. And, you know, we're talking about like 400 ETH here, but for me, that level is just like yesterday, you know?
Yeah. So I want to ask you, so you do all of this trading, and obviously I'm guessing you're like full-time, right? Doing this for yourself now. This is like your job, is it?
Yes, it is.
Have you ever been tempted then to join a company? And then why not? If not, is it just so amazing, I guess, to work for yourself? You have this freedom.
I mean, it's okay. Like, I think you have to be good at imposing discipline on yourself with your routine and whatever else, because of, you know, especially if there's no urgent requirement to like make the rent or whatever it may be from your trading, you can slip into some pretty dangerous patterns of like complacency and laziness and other self-destructive behaviors, especially if your personality is prone to that. That's a very dangerous thing. We have like a lot of freedom, not a ton of obligations, and no kind of social structures to adhere to. There's no supervisor, no boss, and no one making you do anything, right? And that's pretty scary. I've dealt with it kind of okay, well, for the most part. But I think that's the first thing I would say to people considering it. You know, oh, I could go on holiday whenever I want, so much freedom. It can get quite scary, and it also does get boring after a certain point. But yes, I've always done that kind of on my own terms since the beginning. You know, I've got like a whatever YouTube channel with Don where we do some stuff, but you know, I don't really count that as work, really. You know, trading is the main thing, investing in the space, whatever it may be. In terms of joining a company, I mean, I've kind of gone back and forth on this. It depends. It depends on what it would be and what they want from me. A lot of the times nowadays, it's just like people on my tokens and my DMs being like, "Can you just shill us or retweet us?" Like, this doesn't work. You know, this isn't a real thing. But in terms of joining something more meaningful, I mean, it depends on what capacity. The two I can think of, if they wanted me as some sort of either on the trading side or investment side or the risk management side, whatever, that might be interesting, especially if it's one of my friends. And you know, there might be something there that I'd be willing to have that conversation with them if appropriate. Also, I'm like open-minded towards doing it on the content side of things because I write very quickly and concisely and efficiently. I've always found it easy. It's kind of the only thing that carried me through my degree was the ability to write and proofread and on the content side. So if it was something like that, like, hey, look, we have this entire sort of educational hub of resources and stuff about our contract specs for futures, and we have some trading content. Can you just like, you know, be in charge of this thing or proofread it or do whatever, that kind of stuff, at the very least, just to occupy my mind, would be something I'd be open to. But yeah, I mean, look, I see myself as a kind of steward of my own book, and you know, I've got coins to manage and well, stable coins in this case. But you know, overall, I do, especially at this point in the market, I think it'd be a rough point to get distracted because we are at obviously some very key inflection point. And so I want to be all hands on deck, both in terms of deploying and then managing and then sort of overseeing stuff. And the other point I'll make is back in the day, so to speak, it used to be very easy to keep up with the entire space just by sort of scrolling Twitter at the end of the day. You'd know every altcoin that pumped, all the fights and all the sectors and whatever. Nowadays, it's impossible. There's just no way you can quite reasonably keep up in any deep sense with what's going on in crypto all over the place, be that in DeFi, in NFTs, and futures trading, and, you know, altcoins, exchange coins. It's impossible. So I'd need to think very carefully as to whether that sort of trade-off or sacrifice is worth it. But hey, you know, hit my DMs, wink, wink, nudge, nudge, whoever's listening. If you're a relevant party, you know, I'm certainly have time to listen to people, but I haven't had anything that sort of made me want to drop everything and go work somewhere or for someone else.
Yeah, I wonder if that's because they don't know that like you might be available to do that. That's what I wanted to ask you, because maybe I'll cause someone to ask you. It'll be like
Yeah.
exciting.
I mean, I'll hear from anyone.
Yeah, so I want to ask you like really quick. So about being like a trader day to day. So I remember I spoke to Ledger on this series actually like a few weeks ago, And he was saying like how hard it is to do just trading as your sole income, right? Because you're always trading your effectively trading your savings. So you're always like high risk. It's quite hard to make like a stable income, of course. So how important has it been for you to like diversify outside of crypto? Have you done that yet, or is that in the plans, or has it been way too hard to get outside of crypto?
Yeah, it's definitely very hard to get outside of crypto, and that's both from a diversification investment point of view, but also in terms of just where you spend your time. Like I have no real interest in trading stocks or trading anything else. It's like, oh well, do you do forex? It's like, no, I don't care enough about those markets. I don't know those markets well enough either. I've got like tens of thousands or whatever of hours of screen time doing this crypto thing, well, whereas I will have zero doing whatever other thing I move on to, which is quite a scary proposition. So at the very least, I have to be sure that there's some sort of structure there that would make that novelty and learning curve worth it. And it's not entirely clear to me that it is. I agree on the stable income, whatever type of front, especially if you're in a position where you're forced to trade. That should be the first set of circumstances that you avoid. To anyone listening, whatever else, you really need to get out of that mindset, especially if we're talking like short-term trading, like with leverage to make rent or to make a certain payment or whatever it may be. There's no way. Like that's got one of the worst win rates and just the highest risks of ruin out of sort of any set of conditions that you can come to. So I'd avoid that at all costs. And for a lot of people, look, like for me, the majority of people who think they need to trade full time don't actually need to trade full time. And they'd be better off either employing a higher time frame or trading less frequently but better setups, which I think is a very understated point, or doing something like that, or even having disposable income that they can, even if they want to then take 1, 2, 3, 6 months off, that they'll actually have more dry powder to deploy in the bull market to increase their potential returns. All of those are better solutions than being like, I want to be a trader, I want to trade in all conditions, always to. And if I don't trade, I'm in trouble. I think if you can get away from those circumstances in one of the aforementioned ways, that's much preferable. And that's sort of what, the position I'm in as well. As much as I get memed for it, if I don't low time frame trade for any given period of time, like I'll be okay. And that means if I do then choose to engage the market, especially if it's a swing basis or whatever else, I'll know that's coming out of conviction and not out of necessity. And there's an important distinction between those two things, I think.
Yeah, definitely. So the life isn't actually like what you see on Instagram, right? Everyone in Dubai, day
I mean,
trading.
nowadays on crypto, there's certainly the Dubai population isn't lacking. But no, a lot of it is very boring. Like it's very, very boring. So a lot of it is waiting. So you have like an understanding of what your setup, where your setup might form, and you have to wait. And then if the market gets there, you still have to wait for the setup to form and give you an entry trigger. And then even if it triggers and you're in the trade, what do? You wait, because you have to give the market enough chance to like unfold and present some evidence as to whether you're right or you're wrong. And then, if you get stopped out or close the trade or hit to take profit, whatever, what's the next thing you do? Well, you wait for the next one, or maybe there are some active periods where you might need to manage the trade, or you're doing trade reviews or reading or learning something else. But the core kind of skill required, as cliched as it sounds, I mean, a lot of it is patience. It's patience before the trade, it's patience during the trade, it's patience after the trade, patience between trades. Like there's just a lot of sitting and waiting going on. I've always got my fidget spinner, my vape, my phone, and like other forms of distraction just to keep me from getting itchy fingers. And that's like a real thing for people. Like this is the thing, people will transition to trading full time. And I think, okay, well, just because I'm trading full time now, I have to trade all the time. Which is not the same thing by any means, but it's a very easy logical sort of fallacy or leap to make, that they think because I'm at my desk all day I have to be making money, and therefore they end up in these terrible self-destructive patterns of just trading for the sake of trading, which I think is terrible. So yeah, I mean that's at least what a normal day looks like for me.
Yeah, it is the meme reality of having like 8 monitors. How many monitors have you got, Cred?
3 right now, but I only use like 2 of them. And
Okay.
When I finally get around to building my new office and my new place, I think I'll start with 1 and a laptop. It also depends on how you trade to some extent.
Yep.
So it depends on your tools. Like a lot of guys who use the active type of order flow tools, they'll need like the price chart, and then they might need exo charts, like a footprint, and they might want like a DOM, depth of market to kind of see what's going on from that perspective, and then their actual terminal where they execute. So, it does get it can get pretty cumbersome. But it's by no means am I aware of a relationship where a larger number of screens is positively correlated with profitability or anything like that. I think it's purely sort of preference and a layout that works for you, feng shui and all that other stuff.
Yeah, it's that classic meme, right, that we saw the other day. Sam with those like 12 monitors, and it's like all these monitors just to lose 10 billion.
Yes,
I
exactly.
It's pretty funny.
It does make you feel more legit. That's the thing, right?
Yes. I could probably talk to you for ages, but it's actually over anyway. So I want to finish asking you. You're probably going to hate me, right? So I want to ask you, why are you not into NFTs? Is there a reason, or do you have a secret NFT balance?
No, no secret balance. I'm just an idiot, and I don't really like get them or think I have an edge when it comes to them. I think I dabbled in like a couple of Solana NFTs or something, just like when friends launched projects or whatever. But those were at zero basically, which is fine. That was my expectation. So at least I didn't have any delusions as to the value of these things, as to where they'd ultimately end up if my higher time frame read was correct. I was like, well, this is kind of like a write-off investment. In my mind, I think. Look, I'm not an NFT hater by any means. I don't think it's reasonable at all. NFTs are the best, in my estimation, the best moat we've had for normies to get into crypto. Maybe it's a Trojan horse type of thing where we kind of put crypto and censorship resistance and decentralization values and wrap them in PFPs and get through the gates. And then when people engage, you're one step away if you just get into NFTs from like Monero and Tor and all this other stuff, right? So I think you can't bash NFTs if you really believe in any type of adoption thesis for crypto, because all the evidence suggests that that's kind of the best way to get the normies involved. And it's a pretty easy leap to go from trading NFTs, then you're on Uniswap, and then you're on degen leverage and whatever. So it's very effective in that regard. I think the reason it's effective is because it allows you to participate in public key cryptography Ponzi schemes without requiring to have an understanding of finance, right? Like you don't need to be some Rothbardian Austrian economist stake only type of person to participate in NFTs. You don't need to be a decentralization maxi, proof of stake, whatever game theory slashing OFAC blocks to get into NFTs. You just have to, there's the vibes and the community, and it's fundamentally a sort of non-financial, although decreasingly so, and accessible product to people, which I think is awesome. For me, I'm just terrible at trading stuff that isn't liquid. I take a lot of comfort in there being a nuke button where I'm like, if I don't want this exposure, if I've changed my mind, if for any reason I just don't want any part of it. Now, yes, you can incur slippage or whatever else, even in liquid markets, but I take great confidence in knowing that if I want to flatten out and just go to sleep without anything and lock something in or get rid of it, I can do it. It's not exactly the same in sort of less liquid sort of NFT trading. And I say that to my own peril, because I certainly recommend NFT trading especially for smaller accounts. Maybe even more so than altcoin trading, or at least in the same vein, because by definition, when it comes to these sorts of NFT things, in many cases, there are size constraints if you're a bigger operator. So if you're used to doing hundreds of millions, whatever, of notional volume, or billions, whatever, when it comes to liquid perpetual swaps as some big market maker or firm or whatever, you're not going to be able to impose those same parameters in the NFT space. So by definition, a lot of those savvy operators or informed flow or high frequency trading firms or whatever else, people who would normally take your edge or crush you, frankly, in the central limit order book, they're not operating that far out on the risk curve because their operations simply can't scale and can't accommodate for it. So if you're like a smaller account looking to get that initial boost, your 10x, 100x, or take a completely trivial balance to something less trivial, you've got to, by definition, I think, bet on stuff where the bigger guys can't get in and where you have an edge, where your lack of sizing isn't you being underfunded, but actually works to your advantage. And I think the altcoin space, and more recently the NFT space, caters really well to that sort of demographic, and it's a big one. So not an NFT hater by any means, more just incompetence, really, is the way I'd phrase it.
Yeah, I think the benefit of like NFTs, especially like you said, you can like put in a very small amount and then very quickly have a big amount. And I think another huge benefit is, like you said again, you can actually see who's involved
Yes.
because there's like a very small sample size, right? Tools like Nansen very helpful, but you can see like who's actually involved, and you can see who is the largest holders, who's going to dump on you. You can see their trading history. So you can actually understand how they're going to behave. Whereas if you buy like some random altcoin, there's so many holders of the token, you don't know who's actually involved. It's not really transparent in the same way as like we hope it should be. So there are benefits, I think. Just the problem is that liquidity just completely disappears from NFTs, like we've seen in the last few weeks, right? It's been crypto only, so you never really know when NFTs are just going to be like completely pushed to the side and forgotten about. But I think they're a good entry, and like you said, I think they're a nice way for kind of people to get into the space and learn the infrastructure through actually trading something that they just see as like a JPEG. And as you said it, I thought it's interesting, like NFTs are beneficial because you enter into these communities. Tokens have communities, right? Like Telegram groups, but they don't have the same kind of magic, I guess. You don't get that same support. Like I've been in token groups and like Telegram chats. It's all like PvP craziness.
Yeah. Who's gonna
like
get out
complete-
first?
Yeah, it's like insanity. Everyone doesn't actually like each other. But like when you're in these NFT communities, there's actually that support there. So I really like them. But yeah, I could see why you don't get into them. But maybe I'm thinking you could use pseudo swap cred for that instant dump button. That
Yeah, turn it into something recognizable. That'd be cool. No, look, it's you pointed to an important benefit there, which is a lot of NFT people who only trade NFTs actually know the tech better than traders who've been in the space for like 5 years, which is hilarious because some of them have never like actually used the blockchain or used MetaMask or ETH or done a base layer transaction or whatever else because they just, go from their bank account into whatever, fund their futures account and then out. They actually just like there's no engagement on the protocol level to any extent whatsoever. Whereas if you trade NFTs, now, yes, you may be engaging with the blockchain because you're getting scammed and giving your Bored Ape to someone, which is a joke I'll never stop making. But in terms of actually using the tech, which has historically proven to be like a very valuable thing, both in terms of getting airdrops and predicting future narratives and getting a sense for like what good UI UX is, and that informing your future decisions as to analyzing other chains. There are so many benefits to actually using this stuff. And I think on average, NFT people are going to use this stuff much more than the trader types. And that's only to their benefit. And especially if you consider the types of tools they use, like, your Nansens and your Ether scans or whatever, those are useful no matter what you do. Even if you are purely on the trading side. So kind of the byproducts of being involved in the NFT space, I think are very, very beneficial if you care about crypto and interface with it to any extent. So it's, as I said, only to my own peril that I have such a Luddite view of them.
Yes, unfortunately as well, you've got like such a good brand, right? With your profile picture at the moment, you don't need a new one.
Get me those honoraries, right? Am I right? Like,
yeah, so you can dump them, right? That's why you want
exactly. Oh god, yeah, that was a hilarious thing, wasn't it?
Yeah. So what I was going to say, I think I'm going to have to end it because I should realistically sleep. But thank you so much for coming on. I thought it was really, really interesting. I could probably talk to you for ages and ages. Hopefully everyone else enjoyed it as well. Hopefully you enjoyed it, Cred.
It was a pleasure. Thank you for having me. And if you know, I'll happily come back and get through whatever you want to talk about. It's thoroughly enjoyed.
Definitely.
Thank you.
Yeah. Okay. So what day is it today? Friday. Okay. Everyone enjoy your weekend. Take a break, go outside. And yeah, that's about it. Okay. Bye-bye. Oh, no, not bye-bye. If you want to get Nansen, there's 50% off at the moment. Black Friday sale. Go to the link in the description. And yes, that is it. Okay. Now, bye-bye.